From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming July 30th Forex session. In front of you is the Euro US dollar pair, and you can see that we did in fact have a slightly negative session for Monday. But what's interesting is we bounced towards the end of the day, we formed a hammer, and now the question is, where do we go from here? Under normal circumstances, this would be an area with these candles that one would say, well, perhaps we're building pressure to go higher. You'll notice that the market's basically been stopped at the 133 handle more than once now. When you zoom way out on the chart, you can see that there could be an argument for, especially on the weekly chart, a little bit of a descending triangle in this general vicinity, and that's why this trend line is here. That being said, it makes me a little bit cautious about going long of this pair. If we manage to break above the weekly trend line on a daily close, then fine. It's obviously a buy. Momentum has switched in favor of the euro and we continue to go higher. On the other hand, though, if we manage to break the bottom of the hammer here, that should, at least in theory, send this pair back down towards the bottom of the descending triangle. Unfortunately, this is a market that is being driven by expectations out of the Fed and what they are going to do with tapering off of quantitative easing. At one point, they were talking about how the Fed would more than likely taper off in September, and you can see that as soon as it got out that some of the members were more concerned about employment and maybe not quite comfortable doing that, we shot straight up. What's interesting though is we really aren't too far above the top of that range. If you compare it, you take it straight across, that's not a big move over the last couple of weeks. So this has me thinking that we might have a significant seller stepping in here on a resistive candle in this general vicinity or a break of the lows from the session. I would not be hesitant at all to sell. The risk to reward ratio is most certainly there on that type of trade. But whether it is through some type of innuendo in the marketplace or some type of announcement or whatever, if we get a daily close above this line at that point in time, you have to consider that the euro has just broken out of what potentially was a very damaging descending triangle, and that of course is very bullish.